Hello, crypto world! Welcome to the Chart Historian. My name is Justin, and on this channel I delve deep into crypto charts, exploring chart structures, fractals, and patterns. In this video, I'm going to talk about the bull run structure, and I'm going to show you different bull run structures so you can get an understanding of where we are in this structure on today's bull run. Now, if you're looking at this chart, you're seeing a bunch of boxes with a bunch of repetitive words on there. Well, the reason for that is XRP has a repetitive structure. So this structure includes bull runs. We see one right here. We're in one today. Range-bound times and declines. It's these three structures that play out over and over again on the XRP chart. This repetitive structure goes all the way back to the very beginning of the chart. In fact, let's go back there and look at it. So here we are at the very beginning of the XRP chart. You can see that it starts with a range-bound time, goes into a bull run, a decline, another range-bound time, another bull run, another decline. So the way this works is after every single bull run, there comes a decline, 100% of the time. After every single decline comes a range-bound time. This happens 100% of the time. It's important to understand this concept because at some point, today's bull run is going to end and it's going to go into the decline, just like it always has, just like it will continue to do. So what I want to do next is I want to examine a few bull run structures to show you the pattern that takes place in the bull run structure. Before we do that, I want to point out that every single one of these structures, in other words, the range-bound time, the decline, the bull run, they actually all have repetitive parts to them. They look different, and that is because when the pattern repeats, the timing, height, and depth, those do not copy over. So some declines, for instance, may take longer to play out than others. Some declines may go deeper than others. Some parts of a decline may take longer or go deeper or move up higher than other ones. So even though it's the same basic idea, the same basic pattern repeating, the way it's expressed is going to look novel, and that is because of the timing, height, and depth. So now that you understand that, let's jump back to the bull run that took place before today's bull run structure. So here is today's bull run structure. So that would be right here. This one took place in March and April 2021. Okay, so this is that bull run structure. Now, it leaves the last fractal of the sideways range-bound time. It's better to see this fractal before we jump into this bull run structure. So here we are back on TradingView. Now, this is a more nuanced look at this repetitive structure. So here's that range-bound sideways time, here's the bull run, and here's the decline. As you can see, I break it up into smaller parts. So this third fractal is the ending fractal of this range-bound time. I've covered this range-bound time for a long time. For those of you who've been following my channel, you know this structure very well. So this third structure has two main parts. Price moves up to a peak, which is part A. It then declines, which is part B. That's the low. It then recovers, does a smaller correction, and then goes into the bull run. We see the same thing happen on today's chart. It moves up to a peak, which is part A. It then declines to the low, which is part B. It then recovers, does a smaller correction, at least smaller than what came over here. After this small correction, it goes into the bull run. So now let's jump back over to CoinTrader Pro. So price leaves that third range-bound fractal and begins to move up. It moves up into the first correction of the bull run structure. Now, I track corrections in this bull run structure in order to know where we are. I want you to get familiar with this bull run structure because it repeats every single time. So price moves up and then it has a substantial pullback. Now, the way you know you've entered into this first corrective structure is after it leaves the range-bound fractal, it begins to move up and it has smaller pullbacks. But once you see or experience the largest pullback that came before anything else, and then it really begins to go into a corrective structure, you know that this is the first corrective structure. That is the telltale sign. So you can see, let's zoom in, that this is really just a classic bull run corrective structure. It eventually works its way up. It's just a consolidation. That's what it is. It eventually works its way up, gets above the high, and then it moves into the second corrective structure. So this second corrective structure essentially has two parts to it. It has the first part and then the second part. So either one of these corrections can be the larger of the two. In this case, it's the second one. Many times, it's the first one. The key thing to understand with this is that it's separated into two parts. Now, like I pointed out with the timing, height, and depth being unique, what that means is that any one of these structures can be the larger of the three structures. Typically, it's structure 1 or structure 3. So after structure 2 completes, it moves up, gets above the high, and then the next largest pullback that you see after it gets above the high of this second correction is the beginning of the third correction. And this is very similar to the first correction where it kind of winds down and then over time it struggles to get above the top of this. Once it gets above the top, this is important, it moves up to the peak. Now, previously I made a video on how to nail the XRP peak, and the reason why I even made a video like that is because this move up to the peak is actually repetitive. It's a repetitive structure at play. There's 7 moves to the peak. I recommend you check that video out. It's over here if your plan is to sell at the peak. What I'd like to do next is I'd like to go to the bull run that took place before this one. So we were just examining this one. That would be this one, which currently at the time of this recording is the all-time high. Let's zoom in. Before we do that, what I'd like to do is I'd like to show you the third range-bound fractal. Actually, this one played out on a very small time frame, so we can actually view it easily in CoinTrader Pro. Let's do that. Okay, so here is that third range-bound fractal. So in this fractal, price moves up to a peak, which is part A. It then declines to a low, which is part B. So it's doing the same functions as the other third range-bound fractal. It then recovers, does a small correction, and then moves up into the bull run structure. So once it gets going, it comes to the first correction. How do we know that this is the first correction? Well, it's the largest pullback that takes place, at least up to this point. So once this large pullback starts to materialize, you know that we've entered into the first correction. Now, on this one, it's a little different. We have this move up and then this giant fake out, if you will, before continuing the move up. This, in all my videos, I have associated with this first corrective structure. I may rethink that in the sense that today's bull run structure actually has a very similar structure that has played out. I'll show you that in a little bit. Anyway, so you have the first corrective structure. It eventually moves out of this structure, goes into the second corrective structure, and this second corrective structure is made up of two parts, the first correction and the second correction. Now, this second correction could potentially be, I'll show you what I'm talking about. So this could, in theory, be like this, and this second correction could, in theory, and the only reason why I'm saying this is because as these structures continue to play out, the profile of these structures will continue to get clearer and clearer as we print more and more of these iterations. So in today's structure, it looks very similar to this. It just doesn't wick down into this first corrective structure zone. So because it's wicked down into this zone, I've always included it as part of this one. However, I'll show you once we get to today's structure, the similarity of this and this versus the way I've had it in the past where the correction is made up, it's really just a smaller version of that second correction. It doesn't change anything structurally. It's the same structures that are playing out. It just may potentially have played out larger than what I show right here. So once it moves out of this second corrective structure, we go into the third corrective structure, and This, once again, is the largest pullback after we get above the high of the second corrective structure. And in many ways, it's a kind of a generic, a similar corrective structure that takes place in a bull run. It struggles to get above the high. Once it does, it moves to the peak. So we've examined two of these structures. All the XRP structures are the same. You can go back to the very first one, and you have the same concept. So price moves out of that third range-bound fractal. It goes into the first corrective structure. It goes into the second one. This one was tiny, and then goes into the third. From the third, it goes to the peak. So now let's look at today's chart. I'm on TradingView. Now this is that third range-bound fractal. So price moves up to a peak, which is part A. It then declines to a low, which is part B. It then recovers, does a smaller correction, at least smaller than what came before it over here. And then it begins to move up into the first bull run structure. Let's zoom in on this structure. So price moves up out of that third range-bound fractal, and it eventually has a large pullback that takes place. Let's zoom in a little closer. We had pullbacks along the way, but this one was the largest. Starts right here, and then it goes into a classic corrective structure that you would see in a bull run. It then eventually works its way above this and gets into the second corrective structure. So today's second corrective structure is remarkably similar to this version of the second corrective structure. This makes me believe that it could potentially be at play like this, and then it just played out larger than the way I had it before. So on today's second corrective structure, we have the larger correction at the bottom here. It then moves up and has the smaller correction at the top. It eventually moves up, and we experience another very large pullback, which tells us we are in the third correction. Now we're still in this third correction. This third correction is clearly much larger than these other two corrections that came before it, but yet it's not out of the ordinary. Back in November and December of 2014, this bull run structure, we see a similar situation where the third correction is much larger than the other two corrections. So while this may seem strange to you, it's something that is actually normal. There's other situations where the first corrective structure is the largest and these other two are much smaller. So what's going to happen? Well, eventually, price is going to work its way above the current high, and then it's going to move to the peak, just like we saw with all the other iterations. After the third structure, it moves to the peak. There's 7 moves that take place that brings it to the peak. Now, there's one caveat with that. This is the first bull run structure that took place. This took place in November and December 2013. That 7 count will get you to this peak. However, this was the actual highest part of the peak. This whole thing is the peak structure. The peak structure typically has one large peak and then 2 smaller peaks. However, with this one, which is unusual, it has 2 kind of similar peaks. With the second one, just a fraction higher than the first one. It's just a fraction of a cent higher, but it's still a little bit higher. While it's not likely that this is going to play out again, it's still possible. The odds are the other style of peak plays out just because that's the predominant structure that tends to play out, so far at least. But it is possible we see something like this at play. So this peak structure, I've talked about it in some of my other XRP bull run videos. It's a repetitive structure. You essentially, here, let's look at another one. So here is the one where I pointed out where the third correction was very large. This is December 2014. We see one large peak here with 2 smaller peaks. This is the more classic way this plays out. Sometimes this peak can be split, has 2 parts to it. And then these are very clean, smaller peaks, but sometimes they're not as clean. But this is the typical structure that plays out. Once it gets beyond this, it's kind of unpredictable. The decline is a repetitive structure, but Sometimes this first one, part A, isn't as prominent. Sometimes it's very small, and you get a much more of a drop. Here's the bull run from 2021. Here's that first main peak. Here's the two smaller peaks, and then you can see that it begins to drop pretty much right away. Of course, it's a series of bounces as it goes down, but the peak is the predictable part. After this peak, it becomes a little more unpredictable. So if you plan to sell at the peak, this is the place you want to do it at. Once it gets beyond these two small peaks, it's kind of more the Wild West. It's still predictable, but not as reliable in the sense that you can count on this peak being larger. It could be small. Okay, so here we are back at the 2017/18 bull run structure. And what I'd like to do next is I'd like to copy and paste this bull run structure onto today's chart. Now, what I'm going to do as well is I'm going to copy the third range bound, the third corrective structure as well. And the reason why I'm doing that is this third corrective structure on today's chart plays out much larger, so I'm going to have to stretch it quite a bit. Now, instead of dragging them all the way over to today's chart, I've already made a copy, so let's jump over there and see how they look. Okay, so here they are, and as you can see, they do match fairly well, or at least to a certain point. So from the beginning to the third corrective structure, this is a pretty decent match. Let's bring in that third corrective structure fractal and adjust it to roughly today's timing, height, and depth. While it's a little different, there is still a lot of similarity in it as well. So as we can see, this structure is also following the 2017/18 structure fairly closely. However, this is not needed, really. We don't need to do this to know where we're at. Let me remove this. So copying those fractals on here is really cool and all, but it's not needed, as we know that these corrective structures follow the functions that we're looking for. This first corrective structure is the largest pullback before anything that came before it, and after it experiences that large pullback, it goes into a corrective structure. It then moves up, and then it has two corrections that take place. That's what we're looking for. Those are the functions that we're seeking in the second corrective structure. In the third corrective structure, we're looking for a large pullback, and we're also looking for it to eventually make it above the high. Everything that we would expect to see in a bull run structure has played out at this scale. Now, if you watched my original bull run structure videos when the bull run first started, I was very exuberant, and in my video I was talking about how we hadn't even made it to the first bull run structure. And then my next video was, hey, we're very far along in this. That video was not very well liked, I understand, but it brings up a really important point to understand. I had a belief that this bull run structure was playing out at a much larger scale. The chart corrected me. The chart showed me otherwise. I changed my view. I put Mr. Moonboy into a box and scaled my expectations to what the chart was showing me. The best analysts are like water. They follow where the chart leads them. The worst thing I can do, the worst thing you can do if you're into TA, is to project your desires onto a chart. That is, especially in a bull run, that is the worst thing you can do. If you don't control Moonboy, or greed is another name for it, it's going to cause ruin. Now, I know there's a ton of analysts out there right now that are talking how XRP's just getting started. Well, the danger is in finding content like that and listening to content that, let's be honest, we all want to hear that stuff, but it's going to make you miss the peak. And if your plan is to hold through the decline, because that's what comes after the peak, is a decline. And this decline is going to be intense and severe. After this peak, it will go into a decline and then into a range-bound time. Those range-bound times can sometimes play out in a short amount of time. Sometimes they can take years. Folks, if that's your plan, if that's your trading plan, I respect that. That is awesome. Stick to it. If your plan is to sell at the peak, you need to be very cautious at this point in the game. From here, it moves up to the peak, but if you are of the belief that it's just going to continue moving up and you're going to sell at the peak, I have news for you. You're most likely going to be the next generation or part of the next generation of round trippers. In other words, going through the decline, going through the range-bound time, and then hopefully, knock on wood, selling in the next bull run. There's an ancient Greek word called harmatia. I hope I'm saying it right. Harmatia means to miss the mark. Now, in the New Testament, this word, this Greek word, this ancient Greek word, is what is behind the word sin. Now, to miss the mark, or it also says to fail in one's purpose or to err, is very pertinent to investors. We each have a plan for our trades, at least you should. Maybe it's just to hold XRP through the decline and through the next range-bound time and hold it long-term. That's great if that's your plan. If your plan is to hopefully sell in this bull run, well, then you don't want to miss the mark. Missing the mark has negative consequences just like sin does. Either you'll be forced to sell it at a loss or you'll be stuck being a round tripper. Either way, it's going to cost you. I also think that we are our own worst enemies. We want to hear content that is moon boy, that it's just going to, price is just going to keep moving up and up and up, and it's just going to be wonderful. If we give into that side of us, we are going to miss the mark. And, you know, I'm not going to judge you if you miss the mark. I miss the mark all the time. It's part of being human. You're going to judge yourself. If you miss the mark in this bull run, your goal was to sell in this bull run, and because of greed, or which really exuberant moonboyism is just another form of greed, because of greed, you held too long and you missed the mark. As someone who it's happened to, you will probably be your harshest critic. Well, maybe your wife might too. You know, Paul in Romans 7, he talks about this inner conflict. He says, "For the good that I would, I do not, but the evil which I would not, that I do. Now, if I do that I would not, it is no more that I do it, but sin that dwelleth in me. I find then a law, that when I would do good, evil is present with me. For I delight in the law of God after the inward man. But I see another law in my members, warring against the law of my mind and bringing me into captivity to the law of sin, which is in my members." I believe there's a version of that that applies to us today. We have this side of us, this moon boy side, this greed side that is warring against our higher self that has a plan and that intends to do good. But if we yield ourselves to that more base man within us and allow greed to overrun our plan, well, that is the equivalent of sin in investing. And just like sin, it yields negative fruit. We're all going to make these mistakes. It's part of our education. Like the old saying goes, you are what you eat, or in this case, you are what you listen to. I would intentionally avoid content that offers exuberant moon boy content or narratives that are just ridiculously bullish. I would instead seek out analysts that offer critical thinking and poke holes in narratives and offer technical analysis that you may not want to hear. There are plenty of good analysts like that out there. You just have to look for them. Once we get to the peak, those analysts will be extremely valuable because the narrative is going to be so bullish, it's going to be very difficult to sell. Now I want to step back and show you the bigger picture. This is the Dow Jones. It is my belief that the Dow Jones is copying a fractal that was printed from December 2018 to March 2020. This fractal ends, as you can see, with a substantial decline. This decline is the C19 crash. Since that time, the Dow Jones has roughly been repeating the same pattern. Folks, I don't know when this will come to a completion. If it continues at its current pace, the peak could be in around March, mid-March. I don't know if it's going to be that, or it could easily speed up or slow down. So this is just an estimation if it continues to play out at this pace. The Dow Jones is not the only index printing this structure. The S&P 500 is doing the exact same thing. So is the NASDAQ. So is the Russell 2000. This is back to the Dow Jones, and this is the very beginning of the Dow Jones. So it starts in 1896. And if we were to copy this box right here, this peak is 1929, and this is the 1929 crash that takes place. It bottoms out in 1932. If we were to take this structure and copy and paste it onto this side of the chart, now, of course, we would have to match it to the timing, height, and depth that comes after this chart. And really, you can take this and split it up into different parts. So here's those different parts. So if you took this box right here and adjusted it to this timing, height, and depth, if you took this purple box here and adjusted it, you continue to do this as it moves up. You can see that each of these parts, they do correspond with what the chart does. Now, you can actually adjust this even more to where it's easier to understand. Let me show you what that looks like. This is what that would look like. Now, I'm on a month candle. I've been on a month candle since we've been looking at the 1929 stuff. So this is a very zoomed out big picture. This fractal has taken over 90 years so far to develop, and we are at the peak. Now, let's examine this decline. I want to compare this decline with the C19 crash that we just looked at earlier. So if we were to take those two different crashing patterns, crashing fractals, and place them side by side, the blue is the 1929 crash. The red is the C19 crash. You can see that they're essentially the same crash. So what we have coming down the pike, folks, very soon is potentially going to be very big. Holding XRP for too long will mean going through something potentially, we're not 100% sure this is going to play out, but so far everything is leading to this. Potentially, you would be holding through something like this, folks. So understand, we have a window of time. We have a small window where everything is kind of going into its blow-off top. That is going to close soon. So just know where we are in the big picture. This is God's blessing being poured out on us right now. We've planted our seeds in the ground and they're yielding fruit. Don't miss the harvest, people. Harvest while you can before it's gone, because once this hits, and so far it's on track, it's been on track for over 90 years, folks. Since the C19 crash, it's been on track just as much, just on a small time frame. They both are saying the same thing. So this is what we are headed into most likely. So take advantage of the window, take advantage of that blessing, use that wealth to do good. Just know where we are in the big picture. So folks, what we got next is the blow off top in XRP. We got the move up to the peak. I don't try to predict price. I just analyze structure. I'm going to ride this wave up to the peak. I'm going to sell at the peak. I'll buy back in once XRP is in that range-bound sideways time. That's my plan. I'm sticking to it. I'll sell my XRP to moon boys who are holding, thinking that it's going to go up further. Anyways, this is not financial advice. I'm not a financial advisor. If you did find this video helpful, it'd be much appreciated if you hit that thumbs up button. And if you're not yet a subscriber and you'd like to see more of this type of content, I recommend you hit that subscribe button. I'll continue to follow up on this chart as it continues to develop. And by the way, I have a playlist of the Dow Jones, all that stuff that I just showed you. I have a playlist. It goes deeper than just what I showed you. I also have a Patreon, and connected to that Patreon is a Discord where we discuss XRP and other cryptos. There's a lot of great conversation that takes place there. You're welcome to join. People share their charts. They give their insights. It's a $5 a month subscription. I'll put a link to my Patreon in the description of this video. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.